Yo, what's going on, everybody? It is Wednesday, July 5th, and I hope everybody had a nice, safe, wonderful 4th of July. Coming to you here from Florida, where I've been now for not quite a month. Not sure if I'm going to stay down here. But anyway, we had a good market today. Well, we didn't have a good market today. It was down, but I don't see any particular reason for it to be down today other than just like investor nerves, I don't know, just like pessimism. We had on Friday, June 30th, a 112 billion net positive flow, fiscal flow. That was basically that was the first of the month payments carried forward onto June 30th, onto Friday, because the first of the month was a Saturday. That's a big positive net flow day. So the economy is getting nice injections of leading flows from government spending. I don't see anything negative about that whatsoever. I don't know what today's sell-off was all about, but it doesn't really concern me. We're going to come into, we are now in what's today, the 5th of July, and running through August 15th. August 15th will be a quarterly interest payment. So I see this next, 5-6 weeks as a very positive period. And then maybe after that we could have another pullback. September, you have a quarterly corporate tax payment. So we're going to have that effect. But nothing has really changed. It's summertime, so there's maybe a little bit of apathy out there. The dollar was up today. I don't see that as something sustainable. I think the fiscal flows will end up hurting the dollar. So I continue to suggest short dollar, long commodities, long gold, that type of trade, long stocks. Get a pullback like today, which is really, is really based on nothing when you think about it. That's a good day to add to positions because the market's going to go higher. We have net positive fiscal flows. The swimming pool is filling up. So, I don't see anything to get worried about. In terms of Fed and monetary policy, it's the same story. The monetarists have had this wrong for 15, 16 months. The interest rate hikes are now adding substantially to fiscal flows. We saw the inflection point, as I've mentioned so many times, back in October, which I pointed out. I pointed that the exact time out, the exact day out, and that was when the positive impact of the fiscal injections were offsetting the negative impact of the interest rates. But you're not gonna look. Let's be honest. You're not gonna change the monetarist view. They're gonna stick with. They're going to stick with that until they go down to their graves. All right. I read an interesting article today about Warren Buffett, how he's averaged over the course of his life, and God bless him, he's like 93 years old or 90 or whatever. He's averaged over 19% annual returns every year, when the stock market basically, I think, probably averages around 7, 8, 9, 9 maximum, but probably around 7, 8%. And this article was was interesting in the respect that it said, like, not everybody can be a stock picker like Warren Buffett, and not everybody going to get deals like Warren Buffett, but the other key to his success is patience. And that's something I've talked about so many times. Like, all of you out there, you want to be like boom, 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 like, trade today. You want to be like these. I mean, I spent years on 4 different trading floors as a member of 4 different exchanges, where I had advantages over everybody because I was on the floor and I saw the flows and everything. And even that, unless I had some kind of inside information, like I remember a friend, when I used to be on the NYMEX, I had a friend who worked for a big oil company, and he used to signal, this is like, I'm making an admission here. He used to signal me, he used to call me up at my desk on the floor before he would come into the market and do something big. And he'd say, like, Mike, go out there and buy 100 contracts or so. Then I'd make, like, in one trade, I'd make like 30, 40, 50,000 in one trade because I knew what was going to happen. But if you subtract that information, if you take that away, if you don't have access to that, then the most powerful thing you have, and I cannot overemphasize this, the most powerful thing you have is patience. And if you don't have patience, and if you're looking to beat, the so-called the system, which is rigged, all right? I mean, if you look at these algo traders, they spend millions upon millions of dollars to put their computers at the exchanges themselves. So they have, like, literally nanoseconds, to see where the order flow is coming, and they jump in front. By the way, I personally think that should be illegal, because we weren't allowed to do that on the floor, on the exchange, all right? I personally think that should be illegal, but these guys have a lot of clout in Congress, and they're able to squash any kind of legislation that would make that illegal. But basically, that's what they're doing. It's just like, it's front running. It's front running. And I mean, I told you right now, I admitted to you, I was making 30, 40, 80, 90,000 a trade because I was front running what my friend who was at a big oil company was doing on the NYMEX. This is going back, into the 80s. But it's the same thing. So if you're trying to play that game with your little charts and stuff like that, I mean, give it up. Warren Buffett doesn't play that game. He plays the game of value and patience. And a lot of you just don't want to play that game because it's too slow. And on the one hand, I get it, because it's human nature that we want everything like right now, boom, boom, boom. We live in a society where, we get everything right now, or else we're pissed off. But on the other hand, it's totally unrealistic to expect that all the time. And especially to expect, I mean, you don't have this kind of access. You don't have this kind of privilege. You don't have this kind of information. You're just, so, like, what else are you going to do? I mean, patience, everybody can have that if they want it. That's a choice, all right? And you might not, like, if you're a young guy, and this is what always pisses me off, is like they don't teach this in school. They should teach this to kids, because, I've said this a million times. Like, if you put away $50 a month into a stock account and just follow the indices, index fund, that child, and everyone pretty much can afford $50 a month, By the time that child is ready for retirement, and even way earlier, you got millions of dollars in that account. So this is like something everybody can do, but they don't want to, because I understand it's human nature. Like boom, 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 we want it right now. And so we sabotage ourselves. It's a form of self-sabotage. And it took me a long time to understand this. I think I had a good excuse. I was a floor trader, and like we just tried to make money instantly. We were down there. We had every advantage over everybody else. And so that's what we tried to do. So it was ingrained in me, and it took a long time to to release myself from that mentality. If you think about it, I had to break free of that mentality, and it wasn't easy. It wasn't easy. But like I've been saying over the past, week or so, like my portfolio is at an all-time record high. And people are saying, oh, let's see the track record. The track record is stupid. Like, you are not me. I could show you, Warren Buffett could show you exactly what he's doing. And I guarantee you, if you're not the same brain as his, if you're not a carbon copy of him, you will fuck it up. There's elements that are behavioral that you have to have. It's not simply having a scheme or a blueprint. You gotta have, when it comes to investing, you gotta have those behavioral elements. Otherwise, you're gonna fuck it up. You're gonna fuck it up. And a lot of people, they just don't wanna, they don't wanna commit to that. It's about commitment. And they don't wanna commit to that. They want the system fairy. They want the chart fairy. They want something that's gonna pick them up and take them, to the promised land without any kind of stress or hardship or whatsoever. And I mean, that, folks, that's just a fantasy. I'm sorry. If you don't understand by now that that's just a fantasy, I mean, are you an adult or are you a child? That's a good question to ask. Because children want shit right away. It's like, I want that toy, like right now. Oh, sorry son, or sorry daughter. I don't have the money for that to buy it for you. No, I want it right now. I want it right now. That's a child. An adult knows how to suppress that emotion and, work for delayed gratification. That's the difference. Are you a child or are you an adult? That's what it comes down to. Anyway, that's it for today. I don't see any particular reason for the sell-off today. It seems a little bit bogus to me. But from now until August 15th, we should have a positive trend in the market. And I would be using these dips to buy. That's the best advice I could give you right now. See everybody tomorrow. Bye.